Americans are now finding a silver lining amid the coronavirus pandemic. The federal tax deadline has moved to May 17th. Local financial professional Brad Zucker from SMA Wealth Management joining us now with pros and cons of the extended due date and how it impacts our wallets. Brad, thanks for joining us. So why has that tax deadline moved to May 17th?
Well, that new date of May 17th is in fact in response to the tax changes of the COVID relief packages, as well as the IRS is still processing millions of returns from last tax season and trying to navigate between the taxation of unemployment income and the expansion of a child tax credit. So with so many unique situations, many people are facing filing challenges.
Unique to say the least. So what are the pros and cons of this new due date?
Well, the pros obviously is that we now have an additional 4 weeks that we could file our tax return and make a payment without any interest or penalties. Now, it's important to point out that many states do not align their tax deadline with the federal due date. But here in Nevada, the tax deadline has been extended. But regardless of an extended deadline or your tax situation, you want to file as early as you can.
Yeah, this is for those procrastinators out there that have been putting it off all this time and think they have much longer. What are the benefits of filing those taxes sooner rather than later?
Well, two main benefits. First, it's a simple way to protect your identity. You see, the IRS still considers identity theft as one of the biggest tax scams that everyone should be aware of, because all identity thieves need to file an electronic return is your name and your tax ID number. But if you file your return early, the IRS will more likely flag a fake return in your name. So if you or someone you know has been a victim of a tax scam, I have resources on my website at askbradzucker.com to report the claim. Finally, the sooner you can calculate your tax liability, the more time you will have to plan and budget for the amount you owe on May 17th. And regardless if you wait till the last minute or if you file an extension, you still have to pay the amount that you owe. What we don't want to see, Kelsey, is people putting their tax bill on a high interest credit card and not paying it off right away.
Okay, and Brad, you mentioned yourself, this tax season is unique. So how can we better prepare ourselves for taxes in the future?
Well, we want to see everybody be proactive in their tax planning and their estate planning. But if you are in or near retirement, now is the time to take a strategic look at your taxes. The decisions that you make today can help you reduce your taxes, not just next year, but every single year moving forward in retirement. So we want to take a look at how your money decisions today will affect your future taxes to the IRS, lowering risk on your nest egg and creating more lifetime income you can't outlive. So sit with a financial professional who could show you your options, because every situation is unique.